Okay, let's look at exercise 10-8. Real People Sporting introduced a loyalty program in 2020. Every customer who signed up would receive 1% of their total purchases as a check each February for the previous year that could be used in-store on any merchandise within the next 9 months. Customers who look online during the year and check their balance they can look online during the year and check their balance at any time. Laura signed up for the program in 2020 when she purchased a kayak in July for $1,000. Later in September, she purchased a mountain bike for $2,300, and in March, she purchased a paddle board for $2,200 and used her check toward the purchase. Prepare the journal entries for each transaction in July, September, and March. Screen, hold on. There we go. The screen is jumping around. There we go. So prepare the journal entries for each of those months. So in the first one here in July, she purchased a kayak for $1,000. So they received $1,000. Now here we're ignoring taxes and such. So $1,000 in cash, and then sales revenue $1,000. But then we have to account for the loyalty program. So they earn 1%, so 1% of $1,010. So we'll record that as rewards points liability. So we credit that $10, and we debit a sales discount for $10. So here it's sales discount for redemption of rewards points. Then in September, she purchased a mountain bike for $2,300. So again, cash $2,300, sales revenue credit $2,300, and that's for the mountain bike. But then we have to account for the loyalty program. So 1% is $23. So again, you debit your sales discount and you credit the liability account. Then in March of 2021, she purchased a paddleboard for $2,200 and used the check towards the purchase. Now, here, we're going to look at it a little bit differently than what it's shown here. So what we've been doing all along then is your cash and your sales revenue. So sales revenue, $2,200, that's the cost of the pedal boat, the price of the pedal boat. Cash won't be the same because she redeemed some sales points. So she had 23 and 10, so she had $33 to redeem. So the cash that would have been received would have been the $2,200 less the $33. Then she would have also earned points on that purchase, so she would have earned 22. So as we did up here, we debit the sales discount 22, and we would credit the rewards points liability 22. That's not here, but just bear with me. Then we have to account for the points that she used. So she used 33 points from the liability. So then we debit rewards points liability 33. So rewards points liability, there would be a debit for 33 and a credit for 22. They net out to a debit of 11. So hopefully that is clear as mud. So again, $2,200 for the sale of the paddleboard, but she paid $33 less because she redeemed $33 in points. So the cash that was received is $33 less. She earned 22 points. So the same as what we did up here, debit sales discount, credit rewards points liability, 22 and 22. And then we record her using the 33 points. So we would debit the liability account for 33. But because of 33 and 22, net out to a debit of 11. All right. Part B. In 2020, they had a total of $482,000 in sales to customers that signed up for the loyalty program. What is the amount of the liability that would be created by these sales? Well, the liability is just 1%. So 482,000 times 1% of those sales, 4,820, is what would have been created by those sales in that year.